With the 2025 budget now out, the clock is officially ticking for the next tax season. And for millions of us, that means one thing is looming on the horizon: the self-assessment deadline. It's a date that can bring on a whole lot of stress, but it really doesn't have to. We've actually teamed up with the experts at the top UK firm, My Tax Accountant, to build the ultimate guide for getting ready for your 2026 online return. Okay, let's get into it.
Ah yes, January 31st, the big one. The date that so often ends in a mad last-minute dash for receipts and bits of paper. But what if this year could be different?
The secret sauce here isn't panic. It is absolutely preparation. With this simple, step-by-step guide that's been put together by the pros at My Tax Accountant, you'll see how you can get everything sorted stress-free.
So here's our game plan. We're going to cover getting started, all your personal info, how to track your income, the really important bit about claiming expenses, the big shift to digital tax, and finally, filing and getting help when you need it.
Right, Section 1. Before we dive into the deep end with numbers and paperwork, the most important question is the first one. Let's make sure you actually need to be doing this in the first place.
So stop for a second and ask yourself this. Based on all your earnings between April 6th, 2025 and April 5th, 2026, do you have to file a tax return? A lot of people get caught out here because the thresholds can be surprisingly low.
So, who exactly needs to file? Well, if your income from self-employment or even just a little side hustle went over £1,000, then yep, you're in. For landlords, the magic number is £2,500 in property income. You'll also need to file if you're a partner in a business, if your total income is over £100,000, or if you've got significant income from savings and investments. And don't forget the high-income child benefit charge or capital gains tax. If any of those ring a bell, it's time to get your ducks in a row.
Okay, so you need to file. Great. Now get these dates into your calendar immediately. That first one, October 5th, 2026, is absolutely critical if this is your first time. You have to register with HMRC by then, or you could face a penalty straight away. For most of us, though, January 31st, 2027 is the real D-Day for getting that online return in and paying what you owe.
Next up is the easy bit, but it's something you literally can't do the return without. Let's talk about gathering your unique identifiers, those crucial codes that tell HMRC exactly who you are. You basically need 3 keys to unlock your tax return. First, your UTR. That's the 10-digit number you'll find on any letter from HMRC. Second, your national insurance number, which is on any payslip. And finally, your government gateway ID, which is your login for the whole HMRC online world. Here's a pro tip. Find these now. Seriously, digging around for a lost ID in January is a headache you just don't need.
Okay, you've got your personal details sorted. Now let's get into the biggest part of the puzzle, your income. This can feel like the most overwhelming section, so we're going to break it down into nice, manageable chunks to build that full picture of every single pound you earned.
Just take a moment to think about that, really broadly. Did you have a main job? A side business? Do you rent out a flat? Did you get dividends or interest? We need to account for everything. This is where so many people trip up, by completely forgetting about a small stream of income.
Let's start with the most common one. If you're self-employed, but you also have a part-time or even a full-time job, you have to declare that income. Even though the tax has taken its source through PAYE, it's still part of your total income calculation for the year.
These 3 documents are your go-to for employment income. Your P60 is that big end-of-year summary. Your P45 is what you get when you leave a job. And the P11D is really important. It covers any benefits in kind, like private health insurance or a company car, which all have a cash value for tax purposes.
All right, now for self-employment. Whether you're a sole trader, a freelancer, or working in a partnership, this is where having really good records pays off big time. So let's make this real with a quick example.
Let's imagine Chloe, a freelance graphic designer in London. To figure out her income, she needs every single invoice she sent out, her business bank statements to match up all the payments, and a solid record of any cash jobs. HMRC is really hot on this stuff. And if she's VAT registered, her returns provide another essential paper trail. Okay, next up, landlords. If you're earning income from renting out property in the UK, this is a whole separate major category on your tax return. And just like with being self-employed, the devil is always in the detail.
For every property you own, you'll need the total rent you received. Letting agent statements make this super easy. Now, here's a really crucial point about your mortgage. You can only claim tax relief on the interest part of your payments, not the bit that pays off the capital. Your lender's annual statement will break this down for you. And of course, keep every single invoice for repairs.
which actually brings us perfectly to our next section.
And that brings us perfectly to our fourth section. Now stay with me here. This is the part where you can actively and legally reduce the amount of tax you have to pay. It is all about understanding what counts as a legitimate business expense.
This is HMRC's golden rule, wholly and exclusively. So what does that actually mean? Well, simply put, it means the cost was only for your business. A new laptop for your design work? Absolutely. A new TV for your living room that you might occasionally watch a business documentary on? Nope. It's a really simple but powerful distinction to get your head around.
For really common costs, like using your car or your home office, you get a choice. You can go the simple route with simplified expenses, which is just a flat rate per mile or a set monthly amount for your office. It's easy, with less paperwork. Or if your costs are pretty high, it might be worth calculating the actual costs by working out the exact business percentage of your real bills. Yeah, it's a bit more work, but it could mean a much bigger tax saving.
Here is a huge pro tip from the team at My Tax Accountant. You must keep all of your records for at least 6 years. And why so long? Well, that's the window HMRC has to open an inquiry and ask you for proof. Digital copies are totally fine. Just make sure they are backed up somewhere safe.
Okay, so we've covered the here and now. Let's take a little look at the very near future. There's a huge change coming called Making Tax Digital, or MTD, and you might need to be ready for it a lot sooner than you think.
You really need to pay attention to this timeline. From April 2026, MTD will apply to sole traders and landlords who earn over £50,000. Just a year after that, in April 2027, that threshold drops down to $30,000. So if your income is anywhere near those figures, the time to start preparing is right now.
So what does MTD actually mean for you in practice? It's a massive shift. You can say goodbye to that single annual tax return. Instead, you'll be using approved software to keep all your records digitally and then sending 4 quarterly updates to HMRC, plus a final declaration at the end. It's a complete move over to real-time tax reporting.
We are on the home stretch now. We've gathered everything, we've tallied it all up, and we've claimed our expenses. This final section is all about putting it all together and knowing exactly where to turn if you need some support.
So let's just quickly recap the action plan. First, confirm you definitely need to file. Then, gather your IDs. After that, collate all your income, tally up every single expense, and finally, check if MTD is on your radar. If you follow those 5 steps, you'll be in a fantastic position come January.
But look, even with the best checklist in the world, this stuff can still feel like a lot, and that is completely understandable. Tax is complicated, and the thought of getting it wrong can be really stressful. But you are absolutely not on your own with this.
Now, it's really important to remember that this whole guide is for general information. Everybody's tax situation is unique, so this is definitely not a substitute for professional financial advice that's tailored specifically to you.
And that is exactly where the experts come in. For advice that is tailored to your specific situation, you should contact My Tax Accountant. They can help with your self-assessment, getting you ready for MTD, or pretty much any other tax issue you can think of. You can reach them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk. So here's a final thought. The question isn't just about getting this year's tax return filed on time, but about how you can set up your finances for next year to make this whole process even smoother. What's one change you could make today?